The Indian rupee, which is continuing its downward spiral to hit lifetime low in the trades today, breaching the 58 rupees to a dollar mark. It ended the day at 58.15. The currency has declined for 5 straight weeks, declined by 5.5%, and this is a 6th straight week which has opened with 2% decline coming in on your screens there. So nearly a rupee shaved off in case of the Indian unit. The Finance Ministry is trying to play down the panic. In the meanwhile, the ministry expects that the rupee will stabilize in the next 2 or 3 days. The Finance Ministry sources said that the RBI action at this point may weaken the rupee further. OMC dollar demand dropped by $100 million today versus the last session, and the gold imports also are steadily dropping, and that should in turn give some support to the rupee in coming sessions. Suyash Chaudhary, head of fixed income IDFC, thinks that the pace of rupee depreciation is a cause of concern, and the currency settling at the levels of between 57 to 59 reflects a bad macroeconomic situation.
If you look across Asia, we are, one of the highest current account deficit countries in that basket. So I don't think necessarily we should be very alarmed about the depreciation. Certainly we should be alarmed about the pace of depreciation. But if the currency were to eventually settle in the 57-59 band, this would just be predominantly a reflection of our macroeconomic realities.
Also, Tai Hui, Chief Asia Pacific Strategist at JP Morgan Asset Management, remains positive on the Indian rupee, saying that the currency is weak due to global concerns and that the weakness in the rupee will not impact FII inflows.
I think the Indian rupee weakness is a reflection of global concerns rather than domestic worries. I think if you look back to previous experience in India, we've had a very volatile Indian rupee trend over the past several years, but nonetheless, foreign investment inflows continue to be pretty robust and resilient, even at the times of weakness.
Let's also get in then to get a rupee perspective. Joining us are Vijay Bhamwani, author and CEO, BSPL India. Also joining us live on the show is A.V. Rajwade, who's Forex and Treasury Risk Management Consultant. Mr. Rajwade, hi, let's start with you first. And you've heard all of those people mentioning about how they feel on rupee, analysts as well as the ministry officials. 2% down, 1 rupee shaved off in one single day, and there's not even very strong news flows coming into the market. How have you seen the performance?
Well, as you know, Manisha, for a long time now, I've been saying that the downward pressure on the rupee is inevitable. And I had also said that when the Minsky moment will come, there is no way to forecast it. Now, I do not agree with many of the earlier comments in the sense that I think ultimately the rupee's fate is going to be determined by what happens in terms of the Indian economy and not what Mr. Bernanke says or does. I mean, that might affect some intraday trading positions of some traders. But I think over a medium term, and I essentially look at currencies from a medium-term perspective, not as an intraday trader, I think the basic problem remains. Even today, in Dr. Rajan's comments, the focus was on 2 points. Number one, volatility. Number two was on how to finance the deficit. He didn't say a word about how the deficit can or would come down. And I think, to my mind, that problem remains very much. Now, there is also a lot of loose talk, in my view, about the dollar strengthening globally. Now, my memory is that a couple of weeks back it was at about 103 yen to a dollar. Now I think it is below 100. Even the euro, it had gone below 130, it is now at 32. Also, looking at the other emerging market currencies, I think one major difference which we should not forget is that most of the other Asian economies are surplus on their current account. We have a huge deficit. We also have a huge net external liability of about $300 billion. So I think our position is quite different from that of the other Asian economies. And also, as we have seen in recent weeks, the countries like South Africa, Turkey, Brazil, their currencies have also come under much greater pressure, in fact as much pressure as the Indian. Why? Because of their current account deficits and the problems in terms of financing them. I think sort of depending on continued capital inflows to finance current account deficits, and the only thing done in the last 1 year that I can recall is some changes in the import duty on gold. Sure. And nothing else, I think, is being talked about. So I think the problem remains, and downward pressure likely to continue, in my view, until the RBI intervenes in the market.
So, Mr. Rajwade, in that sense, one, what kind of a slide do you further expect in the Indian rupee? Because most of the markets are now working with 60 as a number as well as a number not ruled out. And the second question really is, do you see the political noises that we seem to be hearing on a daily basis? Do you see an impact or sentiment of that as well?
Well, as far as the first question is concerned, I think sort of market participants always like to prefer to talk in terms of nice, round, easy to remember numbers, and 60 certainly qualifies on that account. But I wouldn't be surprised if it does fall below 60, which will be good for the tradable sector, bad for the inflation, etc., etc. But yes, it could fall there. Whether that is enough to restore the competitiveness of the economy, I have my own doubts. My own calculations indicate a significantly different level than 60 in terms of a 10-year analysis. I was recently pleasantly surprised to see two US economists coming more or less to the same kind of number which I had arrived at. So I think, yes, it could cross 60, but that by itself may not be enough. Given the inflation differentials which we have in terms of our major markets and the domestic market. So I think in real terms, the rupee is still overvalued in my view at 58, probably even very much even at 60. So I think that's what my thinking at the moment is.
Vijay, getting you in, because of course on charts we've seen a lot of weakness coming in. It has been falling constantly for last 5 weeks. Going forward, technically, do you see 60 breaching soon?
Manisha, it may not happen soon in the sense that for a trader soon is tomorrow, day after, or maybe as early as next week. That may not really happen. Let's not forget today has been a huge upthrust day for the USD INR, almost 2%. And after a huge upthrust day, there does happen to be some amount of consolidation, maybe even some profit taking before the USD INR bulls get into the buying mode again. But 60 does seem a plausible level to look out for. Maybe it will happen in a fortnight, maybe it will happen in a month. But I remain of the view which I have been advocating on our channel at least since 8 weeks, that the USD INR bulls are back in business and in serious business. The USD INR is in very strong bullish grip. I don't think this bullish grip is going to be let loose very easily. So at this point in time, if I was to see the USD INR available at even 57.25, I think I would want to get back into enhancing a long exposure.
Vijay, what's the expectation? How would you want to trade the markets tomorrow now? After the kind of move that we've seen today, how would you want to get into the trade tomorrow morning?
Well, where the USD INR is concerned, I would want to see it decline before buying, because after a 2% or near 2% upthrust day, I would not bet very heavily that the kind of rally that you saw today will extend tomorrow. There will be some amount of profit sales at higher levels. Now, whether it will come at 58.50 or 58.70, that remains to be seen. But I'm not going out at the open and buying gung-ho.
Mr. Rajwade, it's a data-heavy week as well. You have the inflation, IIP, trade data, all of that coming in before the RBI meeting on 17th of June. Ahead of that, are you reading something on the numbers?
No, not really, because I essentially go by fundamentals. And as you rightly said, the next number is going to be the trade deficit, and 30th June we'll have the Q4 balance of payments data. Which is what one would be looking out for. And the third, of course, is how the fall of the rupee is going to affect the inflationary pressures in the economy. But for that, again, we'll have to wait for some time before this seeps into the domestic pricing levels.
Sure. Mr. Rajwade, also coming back to a question that I asked you earlier is about the elections or the political scenario that India seems to be throwing up at this point in time. Are you reading something on that as well that could be impacting the rupee?
Well, I I do not really think so that it is the politics which is, but what the politics would do is, it would act as a constraint in terms of any sort of specific drastic action which looks like, not becoming very popular. Before that kind of an action is taken, I think the impending elections will remain a constraint in terms of taking any hard action on that issue. I don't think that because we are a democracy, democracies have elections, governments change, so I think they can change. I am not a forecaster of what would happen, but I don't think that that's really, but that is coming in the way of taking any hard actions or necessary steps to where the real problem is the huge deficit on the current account. And even today, we seem to be focusing more on how to finance it rather than how to curtail it.